Hello, this is Simon Thompson, Vice President and Wealth Advisor at Texas Legacy Wealth Management. Welcome to our monthly market update for June 2016. We're going to walk through the major market events of the month. The S&P 500 closed June less than 2 points or 0.1% higher than where we started. As has been the case often this year, the relatively flat monthly return doesn't begin to paint the picture of what the month looked like. We began the month with a push toward the all-time highs before backing off as the UK referendum drew closer and the Fed left rates unchanged once again. The market then rallied on sentiment of a Remain vote out of the UK. Days later, a Leave vote from the UK stunned the market and led to sharp volatility, with the S&P selling off over a 2-day period before a dramatic 5% rally. The last 3 days of the month saw us close flat for the month and up a little less than 2% for the quarter. With the Fed leaving rates unchanged due to an ugly jobs report for May and the looming UK referendum, we saw more downward pressure on interest rates. This pressure was only exacerbated with the rush to safe haven assets after the Brexit vote. We not only have historically low yields around the world, but German 10-year yields are now in negative territory for the first time on record. What that means is investors are willing to pay Germany for the right to lend them money. Return of capital is key, with inflation concerns nowhere to be found. With 10-year yields at these levels, it's clear the market has little fear of inflation or of the Fed raising rates anytime soon. By looking at the Fed funds future markets, we can see that the expectations for a rate hike in July are 0. In fact, shortly after the UK referendum, some felt there may even have been an outside shot for a rate cut. As we look toward the end of 2016, Fed futures are showing a less than 10% chance of rate hike and only a 50% chance of a rate hike before the beginning of 2018. It wasn't long ago that markets were pondering whether we would get 1 or perhaps 2 hikes by the end of this year. As we look toward the latter half of 2016 and the beginning of 2017, there's still a great deal of uncertainty hanging over markets, as we will continue to discuss the Brexit, US election, and moves from central banks around the globe. While we continue to feel that positive returns for stocks by the end of the year are possible, especially given the continued solid US economic data, we do expect to see further volatility. We believe now is a great time to review overall asset allocation, particularly if the volatility we experienced earlier this year was uncomfortable. The recent rally has presented a great opportunity to address asset allocation and ensure it's in line with long-term goals and objectives. For more information about Texas Legacy Wealth Management, feel free to give us a call, email, go to our website, and remember to like us on Facebook and follow us on Twitter. Thank you.